the audio is working from everyone, then we'll start the broadcast. If you guys hear us, if you guys could let us know if you guys can hear us out there. That way we can start the broadcast. Let's see here. Okay. Yep, okay, so everyone can hear us now. All right, we got confirmation. All right, guys, this is Tai Zen, and I'm broadcasting this morning from the city of Dallas, Texas. And with me today, we have Lior Gantz, who is broadcasting from Tel Aviv in Israel. Say hello, Lior.
Hey, everyone. All
right, so Lior has been an investor for many years now. He has, and I'll let you guys hear his background in a minute, but I found out about Lior through an interview that I did with one of his business partners named Ken Amaduri from the channel Crush the Street. And we did a really great interview there. And afterwards, he asked me to talk to Lior and bring him on the show. And so I wanted to bring him on and get his thoughts, his views on investing in general, and looking at the big picture investing, not just cryptocurrencies, but how to diversify and into other areas of investing as well. So welcome to our channel, Lior.
Hey, thanks for having me.
Yeah, let's start off by, can you share with our audience, your background, before we get into cryptocurrencies? What's your background?
Yeah, sure. So I'm 33 right now, and 2 years ago I founded wealthresearchgroup.com. It's a financial newsletter, a free financial newsletter. I started investing at the age of 16. I got my parents to sign off a waiver so I can do my own investing, and started sitting across the banker and telling him what I want to do. And then what I started with was mutual funds, because that's what banks tell you to do. That's what they know. And then at age 18, I started buying individual company stocks. That was 15 years ago, so 2002. And
hey, just real quick, we have a few feedback from the audience that they're saying, is there any way you can turn your audio up? Or because they said that your audio is significantly lower than mine.
I can.
Oh yeah, that's way better. Yeah, that's way better. Now it sounds like you're sitting right in front of me. Yeah, whatever you just did there. Yeah.
Okay, no problem.
Yeah.
I'll bring the mic closer.
Yeah.
Is that good?
Yeah, that's way better. Way better. Thank you.
No problem at all. So I was saying that I had a passion for investing basically since I was 13, and wanted to make money on my own, because I asked my parents for money for this, for that. They couldn't afford it. So I realized very early on, intuitively, that if I wanted anything, I needed to earn it. And I started babysitting and doing all that kind of stuff that you can do at the age of 13, right? Coaching basketball.
So where were you living at this time?
Israel. I grew up in Israel. Yeah.
Okay, because in America, teenagers don't run out there to the bank and try to get permission from their parents and authorization to invest on their own into mutual funds and stuff, and talk to bankers. So
I know.
Is that like a cultural thing? Is that like common in Israel for everyone there, to handle money, or is that just something, an isolated incident with you?
Yeah, I've had zero friends who've done it, and I remember in the army, when in the evening everyone was reading the sports section, I was going through all the stocks, and no one even knew what that meant. So I just figured that starting early would give me a competitive edge, and I think that's true. And Warren Buffett said that he would be far richer than Bill Gates if he only could have read faster. So reading and knowing more is obviously an advantage. And And then I just, I've been an investor, but also I've been an entrepreneur throughout my life. In 2009, I built a real estate business in the U.S. remotely, meaning that I was building a team, and my niche was in abandoned houses, but I did it outside the U.S. personally. I wasn't there until 2013. I sold that business and I opened a boutique fund, and we got into Bitcoin real early at about $13, I think. Yeah, just give or take $13 or something. Sold it at about 119. Got back in again.
Just real quick, because you're bringing up a lot of interesting points here that I think that would be very interesting to our audience. First of all, like, what was like the first stock or mutual fund that you got into, and do you still have it to this day, or did you sell it already?
Mutual funds, obviously, I don't. But the first stock that I bought is called VF Corp. I still own it. It's a clothing holding company for many brands that like Timberland, the North Face, Wrangler. So it's a retailer that essentially own all these brands, but you've never seen VF Corp anywhere. It's like a holding company for all of these. And the reason that I still own it 17 years later is if you look at their dividend history, which is what I am very passionate about, dividend investing, then you'll see that they have raised their dividends by 700%. Just equate that to the real estate market, Ty. So if you buy a house right now for $100,000 and the monthly rent is $1,000, think in 15 years that the monthly rent would be $7,000. So that's the power of companies that have great profitability, great margins, and they just increase their dividends. And on Wealth Research Group on the site, if you go on the homepage, you'll click the top on the left button. If you'll click Wealth Stocks, that's where you'll find some free downloads with some of the companies that I own long term, such as VF Corp. But I have other companies that right now are much cheaper, so they're featured there.
Just real quick, because we get a lot of phishing sites out there. Could you say the name of your website correctly so that the audience knows? Is it wealthresearch.com, .net, .info? Which one is it?
It's wealthresearchgroup.com.
Okay. All right. Thanks. So that way our audience can make sure they have that correctly and not go, because in the world of crypto, there's a lot of phishing sites. So we want to make sure it's the right, correct site. Now,
wealthresearchgroup.com.
Okay. Now, we have a lot of people that are fearful to get into their first investment, whether it's stocks, whether it's cryptocurrencies. And could you share a little bit about when you got into your first investment, whether it was stocks or mutual funds? Like what was it that allowed you to take action while other people are scared to death to make their first investment, or to take action, or to procrastinate? What was it that allowed you to do that so easily in your teenage years?
Well, honestly, I think it's a combination of knowledge, education in advance, and just character, right? It's just the building of your own character. The minute that I realized that in life you have three buckets that that you're working with money. One bucket it's a bottomless pit. Anything you throw in there is gone forever. That's your spending bucket, like your lifestyle burn rate. So whatever money you put in there, it doesn't return to you. You've transferred value to another person. The second bucket is what we call the savings bucket. You just want it full, and you want it to facilitate any outstanding obligation that you have for the next 5-7 years. For me personally, some people have it at a 2-year, 3-year, whatever. And then the third bucket is your investing bucket. And all you need to understand is that bucket grows your wealth. So one sucks away wealth, one retain wealth, and the other one grows it. And then, with investments, I think the most important thing that anyone can do is start to invest right now. Just, the second you finish with this interview, you've got to create a plan and start investing. That's the biggest wealth generator in history. Ty, if you go back to 1802, 215 years ago, and you take $1 and put in the S&P 500, that thing is $769,000. The what you have between your ears, Ty, and what people in the audience have is the greatest tool for wealth ever. It's called innovation. And companies, when you invest in them, when you build a business of your own, when you invest in other people that are talented, that's how you build wealth in this world. That's how you participate in the greatest wealth generator in the world, which is the free enterprise system. Obviously, there's problems, and the free enterprise system is not free, right? It's not as amazing as it was years ago. There's manipulation and there's rigging and it's an insider's game, etc. But I've proven that you can know all that and adopt to it and make a fortune anyways. But by the time you're 33, so
yeah, that's something that I like to jump in right there, Lior. It's interesting that you say that. That it doesn't matter if all those things are happening. There's still opportunities to make money. It's just like my business partner and our other analysts here, leonfu.com, we have a firm belief that, the Bitcoin's a bubble or whatever it is, right? But, there's bubbles in every market. There's a bull market and there's a bear market in every one. That does not mean that there's not an opportunity to make money. So
the funny thing about bubbles is that once you're in a bubble, you don't know that you're in a bubble. The bubble is invisible.
Yeah,
so if everyone's saying that something is a bubble, then it's truly not a bubble yet. And obviously with cryptocurrencies, it's not a bubble. It's a bubble within the alternative media, but it's definitely not a mainstream bubble. If I knock on my neighbor's door, he wouldn't even know what Bitcoin is. So definitely it's not a bubble. A bubble is defined as something very different, and there's so many ways to de-risk your exposure to what you deem as a bubble that it's not even worth talking about. Just cash up if you think cryptocurrencies are too expensive right now. Just cash up and wait for a dip or do something else with your money. The free enterprise system has so many ways that you can participate in it that you don't have to fall in love with any investment. In fact, I'll just tell you something. When I was 16, I fell in love with this motorbike, and I really wanted to buy it. And that thing was a Pandora box. And I finally had to. I threw it. I literally ran it through a cliff, and I didn't want to even sell it because I wouldn't want the nightmare to pass on to another guy. It's true, and that lesson taught me that you don't want to get emotionally attached to things, businesses, investments, etc. Just want to get emotionally attached to your loved ones, but anything else, it's not worth it. And so, when I got involved with investments at first, I literally started very small, and I still until this day believe that the best principles of success in investing is asset allocation. So diversifying within asset classes, not owning 30 stocks, but owning different asset classes. An exposure to assets that are not related to the stock market, like rental real estate or private lending, or owning private businesses, an equity position in private business, having secondary and third and fourth income streams. So building other income streams that are active income streams that you actually own. All of that builds a financial fortress in your life, and you become much more comfortable with living, right?
So when you do that, right? Like, I know one of the biggest fears that people have is just getting started, And one of the things that I always suggest to our audience and our listeners is start with $5, start with $10, start with $20, start with something that that if something happens and you made a mistake, like I recently just talked to a friend and he said, well, if I transfer the Bitcoins from here to here, and what if I do it wrong and I lose it? And I said, well, do it with like $2 or $3. And then if you do it wrong, it's okay. That's what I call a market tuition. That's what we call a market tuition, because we always have to pay a price to get a tuition. You know what I'm saying?
Well,
Like,
the Jews call it Rebbe, which is like the money that you pay to the rabbi so he can give you an advice. You know it's worthless, but you pay it. It's like tuition. But
so what's that called again?
Rebbe, it's in Yiddish. But anyways,
Okay.
the idea, Ty, is basically what you're talking about is baby steps, and you can do that. Or when you take it to the stock market, you obviously can't put $5 in there because the fee is $5 and it's not worth it. But you can put a few $1,000s in there, but you can create what we call a stop loss, where if you lose 5%, 10%, then you just sell it. And if you put $1,000 in it and you lose 5%, you lost $50. If you can't stomach a $50 loss, then that's all the more reason to do this, because you need to develop the stamina. Investing is the science of probabilities and stacking the odds in your favor. So
like when you talk about investing, right? You were in the traditional stock and market and things like that before. How did you transition? What year or what time or what price was Bitcoin when you first heard about it? Could you talk about that? And then
yes. So I have a good friend in Colorado, and in 2012 in the summer, he invited me over to do skiing in Breckenridge. It's close to Aspen, so people can figure out what it is. But anyways, summer of 2012, and then he told me that, and this guy's all about pioneer industry. So he told me that they're working on legalizing cannabis in Colorado. If you remember that happened like in December 2012, from what I was thinking. Anyways, he told me also,
it's a big craze in America right now. Like every amateur investor wants to invest into a cannabis related company or business, you know. So I don't know if that's exactly a good idea or exactly, you know, just because someone smokes weed, that doesn't mean that they should invest into it. I think there should be other fundamentals that they need to look at besides just that.
Obviously, with all of these speculative smaller cap companies or smaller cap businesses or niches, it's all about understanding the people behind them, the people who are the talent, the human talent. That's what builds wealth. So obviously, with cannabis, there's thousands of companies and probably 10 are legitimate. So it's a matter of researching them. Anyways, he told me about Bitcoin. I think it was like $3, and or research it, because I didn't pay attention to it. But when I came skiing there in January of 2013, he really set me down, showed me this, and I think it was the end of January 2013 when I when I purchased my first ones. I think it was like $19, but don't quote me on it. It's low teens, anyways. But it went to like 119 in like 2 months or something. It was epic timing. Couldn't have been better.
So when you got in, did you sell as it was running up, or did you sell on the way down? You know,
I sold it at 119, so I don't remember if it continued going up from there for a few more months or went down, because I thought, man, I just took a 700% gain. It's insane.
You're out of there.
that thing is a bubble. So.
Yeah.
But then after doing more research, etc., and really zoning in on this, I took more positions at 400, 800, and been holding lots and lots of it until today. So it's been a great. This was before Wealth Research Group, but Wealth Research Group was founded in January of 2016. So in February of 2017. We published an alert on Ethereum. It was like 12.8, I think, dollars, and lots of subscribers sent me some screenshots with crazy gains. Nothing makes me happier, because the reason that we founded Wealth Research Group is to share our research. I got to a point in my life where I said, look, I want to share this with people who want to build financial education. Our school systems, they are so irrelevant at this point. It boggles my mind that people go there for so many hours. But I think parents are starting to understand this. Parents my age understand this. I will never send my baby daughter is now 1 year old, and I'll never send her to school. It's preposterous.
Yeah,
I'm
it's
not
funny
saying
that
to this kind of school. I mean,
it's funny that you say that because I had to register my son for school for the first time in Dallas, and
okay.
it was a couple of the beginning of this month, or no, the last week of last month, right? And we went in there, and they asked me, like, what do I do, And I said, I'm retired. I'm not working or anything. And it just went right over the clerk's head. Like she didn't even acknowledge what I just said, So, and she just said, well, what company do you work for?
Yeah.
And I'm like,
it's outside the realm.
Yeah, it's outside the realm. And then she's like, well, we need to know, where you work at and what's your income so that, does your child need, help, paying for lunch and stuff? And I'm like, no, he doesn't need help. I'll cover his lunch myself. And
because they equate retired to like retirees that are living on Social Security or something like that.
Yeah, exactly. And I'm like, no, I don't need to, I don't need to put my kids on reduced lunch or need help from the school to pay for. I'll pay for it myself. I was trying to get the registration done quickly as possible so I can go back and focus on my trading. And I still had to do my duties as a dad and register my son for school and everything. But I was more interested in getting him registered and get back. And they just couldn't grasp that concept, because they looked at me and they're like, well, how can you be retired at your age already? You know what I'm saying? And I'm sure that, well, I'm in my mid 40s. If they look at you in your 30s, they'll probably really freak out if they saw you there registering your kid for school, And
I had this scenario with like a swimming class that I come in like noon and my wife comes with me and they're like, it's great that you can come in every day at noon so when do you work? And it's a new lifestyle, man. We my lifestyle allows me to work from my house, and we travel extensively. We with finding opportunities, with finding companies, with finding investments. You go and you have to sit down in meetings face to face. There's a lot of traveling to do, and it's part of fun, but it's also part of the necessity of finding opportunities. So when you you can kind of divide the world of investing to small cap companies where you have to do a lot of research to find out who the people are behind it, and large cap investments for the long term where it's mostly understanding the balance sheets because it's already established. With small cap companies, it's growth, right? So you want to know who are the people running companies like that because they will bring the value. They are the value. And
it's interesting that you mentioned that about traveling and about looking at these different companies and stuff. Like right now, our team, LeonFood.com and David, they're in London right now, attending the Dash conference and the World Blockchain Forum. And we have friends that say, well, why are you guys spending, $6,000, $7,000, $8,000 to go, to these conferences? That's a waste of money, And for us, for us, it's not a waste of money because if we go there and we meet you or we meet someone else there that gives us some insights of an upcoming project that we don't know about, every conference that we have been to has been very, very profitable for us. Like, that's how we found out about Dash at the Miami conference. That's how we found out about Ethereum at the Texas Bitcoin conference back in 2014. We interviewed, Vitalik, when he was just talking about Ethereum, just writing the white paper and stuff. So, just by knowing these people and getting to know them has been extremely profitable for us. So whenever our friends or the people that don't know about investing, right, and they say that, yeah, you're wasting your money or you're wasting your time. For us, it's like, well, we get to travel wherever we want. So, it's a vacation for us anyway. So they're going to go there for like 2 or 3 days of the conference and then spend 3 weeks over there on vacation. So, it's a very profitable lifestyle, So
relationships are the backbone of the free enterprise system. There isn't any case of someone becoming successful without forming relationships. So, and that's something that you can do even as an employee. Forming relationships gets you inside of, opens doors for you. And the more doors you open, the more you get to the core of businesses and becoming a more startup investor with early stage companies, the better your opportunity is for that company to flourish and for you to make a fortune with it. So,
hey, we just got a comment from one of the viewers, Todd Toe. He says that, I hope to be at that lifestyle that you have, that we have, by next year. And he says I make $400 to $600 a year at my job. So hard to let go because I spent too much time and money in education. What do you have to say to somebody that makes a high income like that? Because they're making $400 to $600 a year, and I'm going to assume that they're in the U.S. or one of the Western nations doing that, and they're probably giving up a third of that to the government for taxes, right? So he's saying that he spent a lot of money and time to get educated to make that kind of income, right? What do you have to say? You guys are a research group. What would you say for him to do to allow him to learn more about like what you're doing and to get to where he can live the same lifestyle that you live, right? And be educated in investing and stuff like that, right? What are some of the things that he can do?
Well, he's very astute and very sharp to understand that you can't just forfeit your lifestyle. There's a family involved, there's risk involved, and you just don't take a huge leap of faith when you have something like I'm assuming you meant $400,000 to $600,000, not $400 to $600 a year. So with somebody who's living at that level of about $30K a month, you've got to realize you've built something, you've built a career. So you are trading a lot of your time for money, and if I'm understanding him correctly, it's a location-dependent occupation. So he has to make tough choices. There's no there's no easy solution to it. But what I can say is that with that type of income, you can slash that income in half and still live a great lifestyle, and take your if you can take that time, if that's possible for him, to take that time and develop his own enterprise, because he's obviously a valued employee. So if you can develop his own enterprise using his skills, then he can make it even more location independent. And obviously, passive investments can really take his life to the next level, because he's now working a lot of active income. But yeah, the world is divided now into occupations that are location independent and location dependent. And if you're already in a trajectory, it not only is it, you got to face some compromises in life. I mean, it's not possible for everyone to just switch over and live that way. I'm lucky that it happened to me, because I took I made some good decisions, and I didn't commit to any location dependent businesses or location dependent occupations in my life. But for somebody who's already in there, if you take that income, that's quite a large income. You can and create 7, 8, 9% passive income in your life. You can think about in a few years becoming much more location independent. And maybe if you build this kind of a portfolio for 10 to 15 years, you can move into a less expensive country. There's so many places that I visited. I visited more than 40 countries in the past 10 years, and I've seen many places that are considered second world countries, but you can live like a king there for like $5,000 a month, and you'll have everything. I mean, honestly, you'll have your internet, you'll have great food, great people, great friends. You're on the beach.
You know, one of the things because we have a lot of. I live in North Dallas. It's a really nice neighborhood. Not sure if you've ever been to Texas, but North Dallas is considered like a really nice area. yeah, the nice part of Dallas. The southern part is not is
I was
okay,
I
but
was I was in Dallas last month. I was driving Lamborghinis and Ferraris and a Viper on a circuit just outside Fort Worth. I can't remember the
yeah,
name of the
it's I think it's called the Texas Speedway.
in my, and then we
Yeah.
went into Dallas for just for dinner.
Yeah, so one of the things that we have clients that are lawyers and doctors and other professionals that we coach with the cryptocurrency investing, and one of the things that we have found that they have done to take time, because if you're making $400,000 to $600,000 a year, more than likely, you're in a professional arena or career. And one of the things that we found out that they have done to help them is that they don't have time. That's like their main thing, is that they don't have time. Even if they have the money to invest and do things like that, but they just don't have the time to do the research. And one of the things that we found out when we asked them is that, hey, what prompted you to, register for our boot camp or anything like that, was that they found out that it was easier to let somebody else do the research and figure it out and then just show them what to do. I'm sure that you had clients like that too.
That's so true.
That they'd rather just have you do the research or figure it out, and then they just come and just, learn it from you instead of sitting at home trying to figure out, okay, which wallet is good, which one should I use, or anything like that, or which one should I get into, right? We found out that a lot of our professional clientele, they prefer us, since we already figured it out, that they prefer that we just do it for them, or show it to them what we learned already, so that they don't have to spend months trying to figure it out, because in 4 days that they spend with us, they can learn so much more. Have you found something, have you seen that happen with your audience as well, with your clients?
That's how life works, right? You have a limited amount of time, and then the rest you want to outsource and leverage using other experts. You guys have a clientele-based business. Wealth Research Group is a financial newsletter with subscribers. We don't have clients, and we don't advise on a personal level because we write a newsletter, so we don't know the people.
Yeah, just to be clear, we don't advise either.
Okay.
We're not licensed financial advisors, but what we do is when these professionals, they're not going to have time to go learn how to use a hardware wallet, learn how to open up an exchange, learn through that, where do you go look for these cryptocurrencies at, how you filter them out, what criteria do you use to figure out which one's good, which one's not good. And then when you find it, how much of your portfolio do you put it into it? How do you rebalance your portfolio? When to take profit? These things, like that. Those, in the U.S., I'm not sure about Israel, but those are the things that we can share with someone. And we're just an education and training. We're not doing financial advice. So I just want to make sure that that's clear, that if your audience or my audience is watching this, that they understand.
Yeah, definitely. Look, Wealth Research Group is just a way for me to share what I learned personally. So
yeah. And so let's talk about that, right? What inspired you to start that? You're doing well with your investing and everything. You're traveling the world. You're living a good lifestyle there that a lot of people would like to live. And what inspired you to? Was it to diversify your portfolio, or did you see a need for this? What inspired you to start the Wealth Research Group?
Well, when one of my first jobs was coaching basketball at the age of 13. And I coached like 6-year-olds, etc. And then all the way up to 18. And I loved coaching. I loved sharing information and sharing techniques and looking at other people and giving them feedback. Or I think it's important for people to understand that the more riches there is in the world, the more people are wealthy, the better off everyone is. So if we can all learn how to share information, just the rest of it, just leave all the negativity, leave all the bad stuff, the bad information, and just stick to what works and share that, and complement each other, etc. We can build a much better society, a much better economy, and business will be more transparent, which is what the blockchain essentially is. So the inspiration for Wealth Research Group was after I ran for 2 years a boutique fund with only 20 well-to-do clients, so very wealthy individuals. They had to have more than $10 million net worth and investable 800 grand with me. So we liquidated that after we made some very powerful investments. And I thought, look, the next stage is not to be involved with 20 people. It's to be involved with something that I can build and share with the mass audience, with anyone who wants to build a financial fortress around himself and his family, and not and is not a well-to-do individual per se. So people just lack financial education. You see it when you speak with people, and it's unfortunate because it drags down the economy. If people made better choices, we would not be in debt problems. We would not be in so much trouble with regards to future entitlements to retirees. There's so many problems with the U.S. Government and with European countries that are very old in demographics and are facing retirement problems. Japan, etc. It's all around the world, and I'm talking about the good economies. You're not talking about second or third world countries. So there's a grave need for financial education, and I think people need to understand that third bucket, that bucket of investments, is very important. It's a must for every person in the world to become an investor at some point in his life. The sooner the better. In my opinion, if the educational system wasn't built this way, people will start investing when they're 0 because their parents will start investing for them. Once they're 18, they'll already have 18 years worth of investments at their accounts, and they'll know what to do with them because their parents would teach them, hey, here's what you need to do with funds. Here's what you need to do. So all people potentially can be entrepreneurs once they're already 18 because they'll live that lifestyle because that's what they're educated at home. It's just my opinion.
So when you started home research, the Wealth Research Group, right? So now that has morphed into becoming another asset or another stream of income for you. Is that correct?
Sure.
Okay. Now, could you share with the audience, right, some of your, this is mainly a cryptocurrency investing channel, could you share like maybe the top 2 or 3 mistakes that you made when you first got into cryptocurrency investing, and maybe some of the 2 or 3 things that you could have done better?
I'm sorry, you cut out for like 10 seconds. Can you repeat that?
Yeah, what I was saying is that, would it be possible for you to share like, your top 3 mistakes that you made, because a lot of times, we learn from our mistakes more so than from the profits that we made.
Sure, it's very valuable. I think learning from mistakes is the number one thing you can do. So with regards to cryptocurrencies, I think my sins are those of avoiding opportunities, being indifferent to some of the cryptocurrencies that I've seen very early on and never took a position in. That's a huge mistake on my part. Obviously, nobody dies.
That was also a huge mistake on my part too, man. Like there was so many like projects that I could have easily put 1 or 2 Bitcoins in, which was very affordable for me at that time. And I didn't. Like, for example, like the one that all my teammates still, rubs it into me is like with Stratus. Like I could have easily put 1 or 2 Bitcoins into it when they had their ICO, and I didn't, So, and it was something that I could have afforded too. So it was not like it was like it was gonna take food off the table or something like that.
Sure. Never put money that you need for food, anyways, in your investable bucket. That investable bucket has to be totally separate. That is money that you can afford to lose. The second mistake that I did was I didn't grasp some of the opportunities for what they were. And we're talking baby steps, but for me, I'm already a seasoned investor and I'm confident with my investments. So taking small positions is something that I should have avoided. Taking small positions, symbolic positions even for me in some of the cryptocurrencies was a mistake. because it's true. Nobody dies from small gains. It's obviously, being in the green is great, but when you can pound the table and back up the truck on a real opportunity that doesn't come back, it will never come back that way. It's a mistake. You can't look at it any other way. It is a mistake to not be a hog when you should be a hog. I could just think of the Berkshire Hathaway offices in 1987 when Coca-Cola was plummeting in price on Black Monday, and Warren Buffett was probably in there corking up champagne bottles because he's buying Coca-Cola shares. 60% of his portfolio was Coca-Cola after that crash. And just to give you an idea, that position cost him, if I'm not mistaken, $400 million. And the quarterly dividend that he receives today is $15 million. So every year he makes 50% on his investment, just in dividends from Coca-Cola in 1987. So that's 30 years in the making. And it's an insane thought on how much he had to be confident to put 60% of his wealth in one company, and that's 60% of his clients' wealth, shareholders' wealth. So when you have to be a hog, you should. If you see a real opportunity, take a sizable position. It's part of investments, and I think that mistake cost me. It could be in the millions. I don't want to even take a.
I know this. When I first heard about, I used to work at an energy brokerage firm that had a Bitcoin farm there, mining farm there, and that's how I learned about Bitcoin. And when I was fortunate that I was very educated about how to trade in the traditional stocks and Forex market, and I understood the process of clearing and settlement. So when I saw how Bitcoin can clear and settle a transaction so quickly, like you said, there's times that you have to become a hog and get greedy and do what you need to do when you see a good opportunity. And for me, when I saw how fast the Bitcoin network cleared and settled a transaction, I put all my life savings into it. Now, I would not do that today because the network is not the same as it was when I first started, but I put my entire life savings into it.
That's amazing.
Yeah, so
that's an amazing story. That's an amazing story, Ty. I didn't know that.
Yeah, that's how I got started. My partner Leon, he thought I was nuts. He only put like a small percentage of his entire net worth in there, and I put like everything, every penny that I could put into it, I bought it. When it was running up, when it was falling, I just bought it and bought it and bought. I even offered all my coworkers that if you buy a Bitcoin today, and a year from now, right, if you lose money on it, I'll buy it back from you at the same price that you paid for it. I even offered the guys that work with me, they all know that I said that. They all know that.
It's a good thing. It's a good thing it worked.
Yeah, and here was the reason why I did that, though, Lior. I believe in it. I understood. I did my research, right? And this is the only time in my entire life that I put my entire life savings on a technology. It's because I did the research, and I came, and it was fortunate that I had transferred money between my broker and myself multiple times in my life. So I know how long it takes, and for something to only just clear and settle instantly like that, and most people don't realize this that are new to Bitcoins, but if you remember back in 2012 and 2013, if I send you a Bitcoin transaction, it was almost, by the time we finished the phone conversation, it was cleared and settled in just a couple minutes, and it was free. And I was thinking like, holy crap, like how can this technology exist and not be valuable? And
it's true. It's true. That is what propelled it, I think.
Yeah, and what got me was this, Lior, is that I didn't have enough money to put into it. That's why I offered, all my coworkers. I said, hey, if and I was willing to guarantee them, hey, if you buy these Bitcoins, right, and you don't make no money from it a year from now, I'll buy it all back from you, because I knew that a year from now I would have more money and I could buy it from them. And I wanted to buy it at this year's price and not next year's price.
I remember that passion with one investment that I had many years ago. So I know it's an intoxicating feeling. So
yeah, but I think we also need to warn your audience and my audience also that you must do your due diligence. Don't listen to what we just said there and go take your life savings and go put on one crypto right now and think that you're going to become a millionaire or anything like that. Make sure that you really do understand what you're investing in, and make sure
I think
that
we're not in that stage anymore. It's becoming much more competitive and much more diverse. It's a professionals game now. And that's why your blog is very valuable, because this is not 2012 or 2013 anymore.
Yeah. So was there any other mistakes in the crypto besides, not going all in whenever you needed to?
I think what you've done with the fact that you have partners that are research partners is a mistake that I've done, because the capacity of research that I've done individually is not sufficient to take advantage of opportunities. Some opportunities, I got calls about it weeks after it already launched, and it's a shame. So leveraging or using partners or other services is truly important when things are going up, right? So you can seize more opportunities. But hey, we can't eat the whole world. So these mistakes at this point, when everyone has made so much money with cryptocurrencies, at this point, these mistakes are pretty good mistakes to have. But in 5 to 10 years, we'll see very different mistakes than this, because the blockchain industry will evolve so much that we'll see, obviously, more companies default and mismanaged. So there's a lot of risk involved in the future of blockchain, and more risk means obviously more opportunity for the ones that do succeed.
Yeah, a lot of people think that because we get flooded with like a dozen ICO interview requests every day, and they offer to pay us to come on our channel so we can review their ICO, and most of them we do not do it.
Sure.
Most of the time because they think that they can just pay us, and then we talk about their ICO to hype up their ICO or pump it up, and what they don't realize is that the projects that we actually talk about is actually through referrals from people that we trust. People that we know, like if it's obvious to me that you know how to invest and you have experience investing and you have experience in taking risks and analyzing companies and analyzing projects, and I know that you've made those mistakes many times before to get to where you're at today. Otherwise, whenever I talk to another trader or an investor, I can tell whenever they're bullshitting.
Okay.
Because there's certain mistakes that you have to make in order to get here. It's like, I grew up studying Wing Chun and the martial arts,
Your skin has to be rubbed.
Yeah, if you tell me that you practice the martial arts, but you've never been punched in the face by accident, or you've never been kicked or in the face, or never been kicked in the head, or never been knocked out once or twice, then
Sure.
That lets me know, well, then you must not have been very serious about it, or you must have had a bullshit instructor or something, because if you practice it for real, more than likely you're gonna, just by the sheer times that you punch and kick and spar with each other, you're gonna accidentally hit each other. You're actually gonna choke each other or submit each other as you're practicing. So whenever I hear people talk about certain things about trading or investing, I can always detect when they're full of shit. You know what I'm saying? So some of the things that you're talking about, I know that, okay, he wouldn't have known that unless he's made that mistake multiple times, right? Before he realized that, so I'm glad to hear that, So talk about how, like you were earlier in the show, you talked about how you feel that your portfolio needs to be diversified, right? Could you share how, do you have 50% in stocks, 30% in precious metals, 10% real estate and crypto? Could you share how you, briefly just do that?
Yeah, sure. And obviously, if you go to wealthresearchgroup.com/2017, so 2017, you can download my personal allocation of assets for 2017. And
okay, can you say that slowly one more time? Because I have a bad habit of not putting things in the description, So can you just say it one more time slowly so that they get the correct website, so they don't go to the wrong website?
Sure. Wealthresearchgroup.com/2017. 2017. So 2017. And look, about 20% or 30% of my net worth is always in cash. It's always liquid. It's always looking for opportunities, and it's always humbling because you don't know what you don't know. So you always need cash around. With regards to stocks, it's usually 40 to 50%, and it's within that 40 to 50%, 80% is in the wealth stocks that I point out in on the website under the button wealth stocks. But there are others, obviously. These are just the ones that are cheap and undervalued right now, but I've owned wealth stocks for 17 years, right? So, and then with a small amount of my portfolio, I put it into the more speculative small sector investments like blockchain, like the natural resources sector, like technology, like biomed, like cannabis, which you mentioned earlier. But I've had a lot of success with it. So it's something that we share also with Wealth 335.
Okay. When you say small percentage, because we have a lot of professionals, lots of engineers that follow our channel, and I don't know how it is in the engineers in Israel, but the engineers in America and most Western countries, they're very mathematical and number inclined. So when you say a small portion of your portfolio into, speculative investments, right? Are you talking about like 10% of your portfolio, 2% of your portfolio?
It's usually about 15%. And the reason is because these opportunities are life-changing, and if you can master the ability to cut your losses, then you'll be fine with them. If you can cut your losses after 20, 25%, 30%, it doesn't matter, and let the winners fly and become a 300, 400, 500% winner. If you just do the math, right? If you get a few wrong and you get a few right, you're well on your way to becoming a much wealthier person. So
I want to jump in right there, because you just said something that is extremely important, and I want to highlight that in case the audience missed it. You said that, hey, put a little bit of your portfolio into each of these investments, and you don't need to be right on all of them, right? And you can get stopped out on most of them, but that small percentage that you are right on, if they hit 4, 5, 6, 7, 800, 1,000%, right, then you are going to make up all those losses and be up and ahead. And I think that when you guys listen to people who trade and invest, this is one of the keys that you look for to see if that person knows what they're talking about. Because if that person, I want you guys to focus on how Lior just mentioned, not about being right, but having an investment system where statistically it favors you. It puts the odds in your favor, right? So that even if you're wrong, you still make money. And then that's whenever you talk to traders and investors who claim to be right all the time, those are the ones that I would avoid, because if they're real traders and real investors, they'll know that investing is not about being right all the time. It's about when you're wrong, you cut your losses short, and when you're right, you let it run. And those big runners and those big winners is what makes up your profits. So I just wanted to just interject there, because when I first started learning how to trade and invest, that was not brought to my attention. The people that first taught me how to trade and invest would always tell me to try to be right all the time. And I realized that, it's not about being right. It's about when you are right, the small percentage of time that you are right, how big are those winners? That's what matters.
Ty.
Yeah.
Two things, and I gotta go for another interview. So I'm sorry to cut this short, but we can definitely do a part 2 to this. But regarding losers and winners, if you close your eyes and think 30 years to the future, you won't even remember the ones that you took a 20% loss on, because the ones that are winners, you can earn 50 to 100 times on them in a course of a career. VF Corp has gained me 47 times my money. Who cares about another stock that is 20% loss? So just figure you put 1,000 in there and 1,000 in there. There you lose 200. Then there you win $46,000. It's a matter of
Yeah, who cares? Who cares about those small losses?
Those small losses are part of life, and you can never be right about every company. So, anyways,
Okay. Okay. So I know you mentioned that you have another interview to go to.
I'm sorry
So
about that.
what if our audience wants to follow you or learn more about your method of trading and investing in the markets and stuff? What is the best place for them to follow up with you, subscribe to your newsletter? Can you just state
The
that?
Sure. The main platform is the Wealth Research Group newsletter, where we put out our research every 2-3 days. Big picture economy, lots of personal finance, and whenever we finish a 30 to 45 day due diligence on a specific company idea, etc., we release that research. We publish it, and so you can subscribe on the website. If you just want to take us for a test drive and check out more information, go to the Wealth Research site, go to the special reports button, and there's a wide array of like great download PDF files. Take your pick and just enjoy it. The idea is that a rising tide lifts all boat. So
Okay, are you pretty active on Twitter, or do you prefer that people who want to follow you just follow the newsletter?
oh yeah, the newsletter definitely.
Okay, so I want to say thanks, for taking the time out to come and share some of
Thanks for
your
inviting me.
investing experiences. We'll definitely look forward to having you back on our show in the future and get some insights from you again, right? So this will conclude the broadcast, guys. If you guys like the interview here I did with Lior and had him on the show, give us a thumbs up, right? And when you guys subscribe to his newsletter, go check it out and see what he does and learn from it. And then let him know that you guys heard about him from our channel, all right? And thanks for joining us on this live broadcast today, guys. And I'll send this out to our list of subscribers so that they'll, for anyone who missed it live, so they can watch it also, Lior. So expect some people to possibly subscribe to your newsletter from there also. And thanks for joining us today. And this will conclude the broadcast, guys. And
Thank you. It was a pleasure.
yeah, and also if you like these types of interviews that we do with people that we find that are real investors, guys, you guys can follow us at www.cryptocurrency.market/newsletter. And you guys can get more interviews like this, all right? So this will conclude the broadcast, and thanks for joining us today, Lior.
Thank you for having me.
All right.
Right? It's just the building of your own character. The minute that I realized that in life you have three buckets that that you're working with money. One bucket has it's a bottomless pit. Anything you throw in there is gone forever. That's your spending bucket, like your lifestyle burn rate. So whatever money you put in there, it doesn't return to you. You've transferred value to another person. The second bucket is what we call the savings bucket. You just want it full, and you want it to facilitate any outstanding obligation that you have for the next like 5-7 years. For me personally, some people have it at a 2-year, 3-year, whatever. And then the third bucket is your investing bucket, and all you need to understand is that bucket grows your wealth. So one sucks away wealth, one retain wealth, and the other one grows it. And then with investments, I think the most important thing that anyone can do is start to invest right now. Just, the second you finish with this interview, you've got to create a plan and start investing. That's the biggest wealth generator in history. Ty, if you go back to 1802, 215 years ago, and you take $1 and put in the S&P 500, that thing is $769,000. The what you have between your ears, Ty, and what people in the audience have is the greatest tool for wealth ever. It's called innovation. And companies, when you invest in them, when you build a business of your own, when you invest in other people that are talented, that's how you build wealth in this world. That's how you participate in the greatest wealth generator in the world, which is the free enterprise system. Obviously, there's problems and the free enterprise system is not free, right? It's not as amazing as it was years ago. There's manipulation and there's rigging and it's an insider's game, etc. But I've proven that you can know all that and adopt to it and make a fortune anyways. But by the time you're 33, so
yeah, that's something that I like to jump in right there, Lior. It's interesting that you say that, that it doesn't matter if all those things are happening, there's still opportunities to make money. It's just like my business partner and our other analysts here, leonfu.com, we have a firm belief that, the Bitcoin's a bubble or whatever it is, right? But, there's bubbles in every market. There's a bull market and there's a bear market in every one. That does not mean that there's not an opportunity to make money. So
the funny thing about bubbles is that once you're in a bubble, you don't know that you're in a bubble. The bubble is invisible.
Yeah.
If everyone's saying that something is a bubble, then it's truly not.
Have enough money to put into it. That's why I offered, all my coworkers. I said, hey, if and I was willing to guarantee them, hey, if you buy these Bitcoins, right, and you don't make no money from it a year from now, I'll buy it all back from you, because I knew that a year from now I would have more money and I could buy it from them, and I wanted to buy it at this year's price and not next year's price.
I remember that passion with one investment that I had many years ago. So I know it's an intoxicating feeling. So
yeah, but I think we also need to warn your audience and my audience also that you must do your due diligence. Don't listen to what we just said there and go take your life savings and go put on one crypto right now and think that you're gonna become a millionaire or anything like that. Make sure that you really do understand what you're investing in, and make sure.
I think we're not in that stage anymore. It's becoming much more competitive and much more diverse. It's a professionals game now. And that's why your blog is very valuable, because this is not 2012 or 2013 anymore.
Yeah. So was there any other mistakes in the crypto besides not going all in whenever you needed to?
I think what you've done with the fact that you have partners that are research partners is a mistake that I've done, because the capacity of research that I've done individually is not sufficient to take advantage of opportunities. Some opportunities, I got calls about it weeks after it already launched, and it's a shame. So leveraging or using partners or other services is truly important when things are going up, right? So you can seize more opportunities. But hey, we can't eat the whole world. So these mistakes at this point, when everyone has made so much money with cryptocurrencies, at this point, these mistakes are pretty good mistakes to have. But in 5 to 10 years, we'll see very different mistakes than this, because the blockchain industry will evolve so much that we'll see obviously more companies default and mismanaged. So there's a lot of risk involved in the future of blockchain, and more risk means obviously more opportunity for the ones that do succeed.
Yeah, a lot of people think that because we get flooded with like a dozen ICO interview requests every day, and they offer to pay us to come on our channel so we can review their ICO, and most of them we do not do it.
Sure.
Most of the time because they think that when they're to handle money, or is that was just something, an isolated incident with you?
Yeah, I've had zero friends who've done it, and I remember in the army when in the evening everyone was reading the sports section. I was going through all the stocks, and no one even knew what that meant. So I just figured that starting early would give me a competitive edge, and I think that's true. And Warren Buffett said that he would be far richer than Bill Gates if he only could have read faster. So reading and knowing more is obviously an advantage. And then I just I've been an investor, but also I've been an entrepreneur throughout my life. In 2009, I built a real estate business in the U.S. remotely, meaning that I was building a team, and my niche was in abandoned houses, but I did it outside the U.S. personally. I wasn't there until 2013. I sold that business and I opened a boutique fund, and we got into Bitcoin real early at about $13, I think. Yeah, just give or take $13 or something. Sold it at about 119. Got back in again.
Just real quick, because you're bringing up a lot of interesting points here that I think that would be very interesting to our audience. You know, first of all, like, what was like the first stock or mutual fund that you got into, and do you still have it till this day, or did you sell it already?
Mutual funds, obviously, I don't. But the first stock that I bought is called VF Corp. I still own it. It's a clothing holding company for many brands that you know, like Timberland, the North Face, Wrangler. So it's a retailer that essentially own all these brands, but you've never seen VF Corp anywhere. It's like a holding company for all of these. And the reason that I still own it 17 years later is if you look at their dividend history, which is what I am very passionate about, dividend investing, then you'll see that they have raised their dividends by 700%. Just equate that to the real estate market, Ty. So if you buy a house right now for $100,000 and the monthly rent is $1,000, think in 15 years that the monthly rent would be $7,000. So that's the power of companies that have great profitability, great margins, and they just increase their dividends. And on Wealth Research Group, on the site, if you go on the homepage, you'll click the top on the left button. If you'll click Wealth Stocks, that's where you'll find some free downloads with some of the companies that I own long term, such as he has to make tough choices. There's no there's no easy solution to it. But what I can say is that with that type of income, you can slash that income in half and still live a great lifestyle, and take if you can take that time, if that's possible for him, to take that time and develop his own enterprise, because he's obviously a valued employee. So if you can develop his own enterprise using his skills, then he can make it even more location independent. And obviously, passive investments can really take his life to the next level, because he's now working a lot of active income. But yeah, the world is divided now into occupations that are location independent and location dependent. And if you're already in a trajectory, it not only is it, you got to face some compromises in life. I mean, it's not possible for everyone to just switch over and live that way. I'm lucky that it happened to me, because I took I made some good decisions, and I didn't commit to any location dependent businesses or location dependent occupations in my life. But for somebody who's already in there, if you take that income, that's quite a large income. You can and create 7, 8, 9% passive income in your life. You can think about in a few years becoming much more location independent. And maybe if you build this kind of a portfolio for 10 to 15 years, you can move into a less expensive country. There's so many places that I visited. I visited more than 40 countries in the past 10 years, and I've seen many places that are considered second world countries, but you can live like a king there for like $5,000 a month, and you'll have everything. I mean, honestly, you'll have your internet, you'll have great food, great people, great friends. You're on the beach.
You know, one of the things because we have a lot of I live in North Dallas. It's a really nice neighborhood. Not sure if you've ever been to Texas, but North Dallas is considered like a really nice area. Yeah, the nice part of Dallas. The southern part is okay.
I was in Dallas last month. I was driving Lamborghinis and Ferraris and a Viper on a circuit just outside Fort Worth. I can't remember the
Yeah,
name of
it's I think it's called the Texas Speedway.
in my, and then we
Yeah.
went into Dallas for dinner.
Yeah, so we're morphed into becoming another asset or another stream of income for you. Is that correct?
Sure.
Okay. Now, could you share with the audience, right, some of your, since this is mainly a cryptocurrency investing channel, could you share like maybe the top 2 or 3 mistakes that you made when you first got into cryptocurrency investing, and maybe some of the 2 or 3 things that
I'm sorry.
that you could have done better?
I'm sorry, you cut out for like 10 seconds. Can you repeat that?
Yeah, what I was saying is that would it be possible for you to share like your top 3 mistakes that you made? Because a lot of times we learn from our mistakes more so than from the profits that we made.
Sure, it's very valuable. I think learning from mistakes is the number one thing you can do. So, with regards to cryptocurrencies, I think my sins are those of avoiding opportunities, being indifferent to some of the cryptocurrencies that I've seen very early on and never took a position in. That's a huge mistake on my part. Obviously, nobody dies.
That was also a huge mistake on my part too, man. Like there was so many like projects that I could have easily put 1 or 2 Bitcoins in, which was very affordable for me at that time. And I didn't. Like, for example, like the one that all my teammates still, rubs it into me is like with Stratus. Like I could have easily put 1 or 2 Bitcoins into it when they had their ICO, and I didn't, So, and it was something that I could have afforded too. So it was not like it was like it was gonna take food off the table or something like that.
Sure. Never put money that you need for food anyways in your investable bucket. That investable bucket has to be totally separate. That is money that you can afford to lose. The second mistake that I did was I didn't grasp some of the opportunities for what they were. And we're talking baby steps, but for me, I'm already a seasoned investor and I'm confident with my investments. So taking small positions is something that I should have avoided. Taking small positions, symbolic positions even for me in some of the cryptocurrencies was a mistake, because it's true, nobody dies from small gains. It's obviously being in the green is great, but when you can pound the table and back up the truck on a real opportunity that doesn't come back, it will never come back that way. It's a mistake. You can't look at it any other way. It is a mistake to not be a hog when you should be ox. But owning different asset classes, an exposure to assets that are not related to the stock market, like rental real estate or private lending, or owning private businesses, an equity position in private business, having secondary and third and fourth income streams. So building other income streams that are active income streams that you actually own. All of that builds a financial fortress in your life, and you become much more comfortable with living, right?
So when you do that, right? Like I know one of the biggest fears that people have is just getting started, And one of the things that I always suggest to our audience and our listeners is start with $5, start with $10, start with $20, start with something that that if something happens and you made a mistake, like I recently just talked to a friend and he said, well, if I transfer the Bitcoins from here to here, and what if I do it wrong and I lose it? And I said, well, do it with like $2 or $3. And then if you do it wrong, it's okay. That's what I call a market tuition. That's what we call a market tuition, because we always have to pay a price to get a tuition. You know what I'm saying?
Well, the Jews call it Rebbe Geld, which is like the money that you pay to the rabbi so he can give you an advice. It's worthless, but you pay it, so it's like tuition. But
so what's that called again?
Rebbe Geld. It's in Yiddish. But anyways, the idea, Ty, is basically what you're talking about is baby steps, and you can do that. Or when you take it to the stock market, you obviously can't put $5 in there because the fee is $5 and it's not worth it. But you can put a few $1,000s in there, but you can create what we call a stop loss, where if you lose 5%, 10%, then you just sell it. And if you put $1,000 in it and you lose 5%, you lost $50. If you can't stomach a $50 loss, then that's all the more reason to do this, because you need to develop the stamina. Investing is the science of probabilities and stacking the odds in your favor. So
like when you talk about investing, right? You were in the traditional stock and market and things like that before. How did you transition? What year or what time or what price was Bitcoin when you first heard about it? Could you talk about that? And then when?
So I have a good friend in Colorado, and in 2012 in the summer, he invited me over to do skiing in Breckenridge. It's close to Aspen, so people can, smaller cap companies or smaller cap businesses or niches. It's all about understanding the people behind them, the people who are the talent, the human talent. That's what builds wealth. So obviously with cannabis, there's thousands of companies and probably 10 are legitimate. So it's a matter of researching them. Anyways, he told me about Bitcoin. I think it was like $3, and or research it, because I didn't pay attention to it. But when I came skiing there in January of 2013, he really set me down, showed me this, and I think it was the end of January 2013 when I got it. When I purchased my first ones, I think it was like $19, but don't quote me on it. It's low teens, anyways. But it went to like 119 in like 2 months or something. It was epic timing. Couldn't have been better.
So when you got in, did you sell as it was running up, or did you sell on the way down?
I sold it at 119, so I don't remember if it continued going up from there for a few more months or went down, because I thought, man, I just took a 700% gain. It's insane.
You're out of there.
that thing is a bubble. So,
yeah.
but then after doing more research, etc., and really zoning in on this, I took more positions at 400, 800, and been holding lots and lots of it until today. So it's been a great. This was before Wealth Research Group, but Wealth Research Group was founded in January of 2016. So in February of 2017, we published an alert on Ethereum. It was like 12.8, I think, dollars, and lots of subscribers sent me some screenshots with crazy gains. Nothing makes me happier, because the reason that we founded Wealth Research Group is to share our research. I got to a point in my life where I said, look, I want to share this with people who want to build financial education. Our school systems, they are so irrelevant at this point. It boggles my mind that people go there for so many hours. But I think parents are starting to understand this. Parents my age understand this. I will never send my baby daughter is now 1 year old, and I'll never send her to school. It's preposterous.
Yeah, it's funny that
to this kind of school. I mean,
it's funny that you say that, because I had to register my son for school for the first time in Dallas, and it was a couple of the beginning of this month, or no, the last week of last month, right? And we went in there, and they asked me, what's
go on the homepage. You'll click the top on the left button. If you'll click Wealth Stocks, that's where you'll find some free downloads with some of the companies that I own long term, such as VF Corp. But I have other companies that right now are much cheaper, so they're featured there.
Just real quick, because we get a lot of phishing sites out there. Could you say the name of your website correctly so that the audience knows? Is it wealthresearch.com, .net, .info? Which one is it?
It's wealthresearchgroup.com.
Okay. All right. Thanks. So that way our audience can make sure they have that correct and not go, because in the world of crypto, there's a lot of phishing sites, so we want to make sure it's the right correct site. Now,
wealthresearchgroup.com.
okay. Now, we have a lot of people that are fearful to get into their first investment, whether it's stocks, whether it's cryptocurrencies. And could you share a little bit about when you got into your first investment, whether it was stocks or mutual funds? Like what was it that kept you, that allowed you to take action while other people are scared to death to make their first investment, or to take action, or to procrastinate? What was it that allowed you to do that so easily in your teenage years?
Well, honestly, I think it's a combination of knowledge, education in advance, and just character, right? It's just the building of your own character. The minute that I realized that in life you have three buckets that that you're working with money. One bucket has it's a bottomless pit. Anything you throw in there is gone forever. That's your spending bucket, like your lifestyle burn rate. So whatever money you put in there, it doesn't return to you. You've transferred value to another person. The second bucket is what we call the savings bucket. You just want it full, and you want it to facilitate any outstanding obligation that you have for the next like 5-7 years. For me personally, some people have it at a 2-year, 3-year, whatever. And then the third bucket is your investing bucket, and all you need to understand is that bucket grows your wealth. So one sucks away wealth, one retain wealth, and the other one grows it. And then with investments, I think the most important thing that anyone can do is start to invest right now. Just the second you finish with this interview, you've got to create a plan and start investment. That's the biggest wealth generator in history. Ty, if you go back to 1802, 215 years ago, and you take $1 and put in the S&P 500, that thing is 769. About Bitcoin, I think it was like $3, and research it, because I didn't pay attention to it. But when I came skiing there in January of 2013, he really set me down, showed me this, and I think it was the end of January 2013 when I when I purchased my first ones. I think it was like $19, but don't quote me on it. It's low teens, anyways. But it went to like 119 in like 2 months or something. It was epic timing. Couldn't have been better.
So when you got in, did you sell as it was running up, or did you sell on the way down?
I sold it at 119, so I don't remember if it continued going up from there for a few more months or went down, because I thought, man, I just took a 700% gain. It's insane.
You're out of there.
that thing is a bubble. So,
yeah.
But then after doing more research, etc., and really zoning in on this, I took more positions at 400, 800, and been holding lots and lots of it until today. So it's been a great. This was before Wealth Research Group. But Wealth Research was founded in January of 2016. So in February of 2017, we published an alert on Ethereum. It was like 12.8, I think, dollars, and lots of subscribers sent me some screenshots with crazy gains. Nothing makes me happier, because the reason that we founded Wealth Research Group is to share our research. I got to a point in my life where I said, look, I want to share this with people who want to build financial education. Our school systems, they are so irrelevant at this point. It boggles my mind that people go there for so many hours. But I think parents are starting to understand this. Parents my age understand this. I will never send my baby daughter is now 1 year old, and I'll never send her to school. It's preposterous.
Yeah,
it's funny to this kind of a school. I mean,
it's funny that you say that, because I had to register my son for school for the first time in Dallas, and it was a couple of the beginning of this month, or no, the last week of last month, right? And we went in there, and they asked me, what do I do, and I said, I'm retired. I'm not working or anything. And it just went right over the clerk's head. Like, she didn't even acknowledge what I just said, you know? So, and she just said, well, what company do you work for? You know? Yeah. And I'm like, you know,
it's outstanding feeling. So
yeah, but I think we also need to warn your audience and my audience also that you must do your due diligence. You know, don't listen to what we just said there and go take your life savings and go put on one crypto right now and think that you're gonna become a millionaire or anything like that. Make sure that you really do understand what you're investing in, and make sure.
I think we're not in that stage anymore. It's becoming much more competitive and much more diverse. It's a professionals game now. And that's why your blog is very valuable, because this is not 2012 or 2013 anymore.
Yeah. So was there any other mistakes in the crypto besides, you know, not going all in whenever you needed to?
I think what you've done with the fact that you have partners that are research partners is a mistake that I've done, because the capacity of research that I've done individually is not sufficient to take advantage of opportunities. Some opportunities, I got calls about it weeks after it already launched, and it's it's a shame. So leveraging or using partners or other services is truly important when things are going up, right? So you can seize more opportunities. But hey, we can't eat the whole world. So these mistakes at this point, when everyone has made so much money with cryptocurrencies, at this point, these mistakes are pretty good mistakes to have. But in 5 to 10 years, we'll see very different mistakes than this, because the blockchain industry will evolve so much that we'll see, obviously, more companies default and mismanaged. So there's a lot of risk involved in the future of blockchain, and more risk means obviously more opportunity for the ones that do succeed.
Yeah, you know, a lot of people think that because we get flooded with like a dozen ICO interview requests every day, and they offer to pay us to come on our channel so we can review their ICO, and most of them we do not do it. You know, sure. most of the time because they think that they can just pay us, and then we talk about their ICO to, you know, hype up their ICO or pump it up, you know. And what they don't realize is that the projects that we actually talk about is actually through referrals from people that we trust. You know, we people that we know. Like, if it's obvious to me that you know how to invest, and you have experience investing, and you have experience in taking risks and analyzing companies and analyzing projects. You know, and I know that you've made those mistakes many times before. And I don't know how it is in the engineers in Israel, but the engineers in America and most Western countries, they're very mathematical and number inclined. So when you say a small portion of your portfolio into, you know, speculative investments, right? Are you talking about like 10% of your portfolio, 2% of your portfolio?
It's usually about 15%. And the reason is because these opportunities are life-changing, and if you can master the ability to cut your losses, then you'll be fine with them. If you can cut your losses after 20, 25%, 30%, it doesn't matter, and let the winners fly and become a 300, 400, 500% winner. If you just do the math, right? If you get a few wrong and you get a few right, you're well on your way to becoming a much wealthier person. So I
want to jump in right there, because you just said something that is extremely important, and I want to highlight that in case the audience missed it. You know, you said that, hey, you know, put a little bit of your portfolio into each of these investments, and you don't need to be right on all of them, right? And you can get stopped out on most of them, but that small percentage that you are right on, if they hit 4, 5, 6, 7, 800, 1,000%, right, then you are going to make up all those losses and be up and ahead. And I think that when you guys listen to people who trade and invest, this is one of the keys that you look for to see if that person knows what they're talking about. Because if that person, I want you guys to focus on how Lior just mentioned, not about being right, but having an investment system where statistically it favors you. It puts the odds in your favor, right? So that even if you're wrong, you still make money. And then that's whenever you talk to traders and investors who claim to be right all the time, those are the ones that I would avoid, because if they're real traders and real investors, they'll know that investing is not about being right all the time. It's about when you're wrong, you cut your losses short, and when you're right, you let it run. And those big runners and those big winners is what makes up your profits. So I just wanted to just interject there, because when I first started learning how to trade and invest, that was not brought to my attention. You know, the people that first taught me how to trade and invest would always tell me to try to be right all the time. And I realized that, you know, it's not about being right. It's about when you are right, the small percentage of time that you are right, how big are those winners? That's what matters.
Ty.
Yeah.
Two things, and I gotta go for another interview. So I'm sorry to cut this short, but we can definitely do a part 2 to this. That position cost them, if I'm not mistaken, $400 million, and the quarterly dividend that he receives today is $50 million. So every year he makes 50% on his investment, just in dividends from Coca-Cola in 1987. So that's 30 years in the making. And it's an insane thought on how much he had to be confident to put 60% of his wealth in one company. And that's 60% of his clients' wealth, shareholders' wealth. So when you have to be a hog, you should. If you see a real opportunity, take a sizable position. It's part of investments. And I think that mistake cost me, it could be in the millions. I don't want to even take a.
I know this. When I first heard about, I used to work at an energy brokerage firm that had a Bitcoin farm there, mining farm there, and that's how I learned about Bitcoin. And when I was fortunate that I was very educated about how to trade in the traditional stocks and Forex market, and I understood the process of clearing and settlement. So when I saw how Bitcoin can clear and settle a transaction so quickly, you know, like you said, there's times that you have to become a hog and get greedy and do what you need to do when you see a good opportunity. And for me, when I saw how fast the Bitcoin network cleared and settled a transaction, you know, I put all my life savings into it. You know, now, I would not do that today because the network is not the same as it was when I first started, but I put my entire life savings into it, you know?
That's amazing.
Yeah. So
that's an amazing story. That's an amazing story, Ty. I didn't know that.
Yeah. That's how I got started. You know, my partner, Leon, he thought I was nuts. He only put like a small percentage of his entire net worth in there. And I put like every penny that I could put into it, I bought it. When it was running up, when it was falling, I just bought it and bought it and bought. I even offered all my coworkers that if you buy a Bitcoin today, in a year from now, right, if you lose money on it, I'll buy it back from you at the same price that you paid for it. I even offered the guys that work with me, they all know that I said that. They all know that.
It's a good thing. It's a good thing it worked.
Yeah, and here was the reason why I did that, though, Lior. I believe in it. I understood. I did my research. Right, you know, and this was the only time in my entire life that I put my entire life savings on a technology. It's because I did the research, you know, and I came, and it was fortunate that I had transferred money between my broker and myself multiple times in my life, so I know how long it takes, and for something to only just clear and settle instantly like that, you know, and most people don't realize this that are new to Bitcoins, but if you remember back in 2012 and 2013. If I send you a Bitcoin transaction, it was almost
future entitlements to retirees. There's so many problems with the U.S. Government and with European countries that are very old in demographics and are facing retirement problems. Japan, etc. It's all around the world, and I'm talking about the good economies. You're not talking about second or third world countries. So there's a grave need for financial education. And I think people need to understand that third bucket, that bucket of investments, is very important. It's a must for every person in the world to become an investor at some point in his life. The sooner, the better. In my opinion, if the educational system wasn't built this way, people will start investing when they're 0 because their parents will start investing for them. Once they're 18, they'll already have 18 years worth of investments at their accounts, and they'll know what to do with them because their parents would teach them, hey, here's what you need to do with funds. Here's what you need to do. So all people potentially can be entrepreneurs once they're already 18 because they'll live that lifestyle because that's what they're educated at home. It's just my opinion.
So when you started home research, the wealth research group, right? So now that has morphed into becoming another asset or another stream of income for you. Is that correct?
Sure.
Okay. Now, could you share with the audience, right, some of your, since this is mainly a cryptocurrency investing channel, could you share like maybe the top 2 or 3 mistakes that you made when you first got into cryptocurrency investing, and maybe some of the 2 or 3 things that
I'm sorry.
that you could have done better?
I'm sorry, you cut out for like 10 seconds. Could you repeat that?
Yeah, what I was saying is that, would it be possible for you to share like, your top 3 mistakes that you made, because a lot of times, we learn from our mistakes more so than from the profits that we made.
Sure, it's very valuable. I think learning from mistakes is the number 1 thing you can do. So with regards to cryptocurrencies, I think my sins are those of avoiding opportunities, being indifferent to some of the cryptocurrencies that I've seen very early on and never took a position in. That's a huge mistake on my part. Obviously, nobody dies.
That was also a huge mistake on my part too, man. Like there was so many like projects that I could have easily put 1 or 2 Bitcoins in, which was very affordable for me at that time, and I didn't. Like for example, like the one that all my teammates still rubs it into me is like with Stratus. Like I could have easily put 1 or 2 Bitcoins into it when they had their ICO, and I didn't, So, and it was something